My name is Chris Sagne. I'm with the Consensys conference here, and it's my pleasure to introduce our next panel, DAOs and Stakeholder Environmentalism. Another really important talk here. How can we use the collective to essentially conserve and hopefully restore the collective? So I'm really excited to introduce our speakers now. In the middle here we have Lisa Wade, the CEO of DigitalX, Bill Kentrup, the co-founder of Allinfra, and right here next to me, Stephen Haft, the head of global partnerships for Consensys. So really looking forward to it, guys, and thank you so much.
Yes, thank you, Chris, and thank you all for coming. I'd like to just at the outset take a minute to say and remind you of something you probably already know, which is, so I'll keep it brief, which is that in 2015, the United Nations passed the Paris Agreement on the global climate. That same summer, actually, Vitalik Buterin, Joe Lubin, and Charles Hoskinson and others created Ethereum. And from the earliest days, there was strong alignment between what we now call Web3 and sustainability. Strong alignment around transparency in regards to data, strong alignment around ending fraud in financial accounting, strong alignment around spreading the benefits of tech globally, strong alignment around these topics that, as we can see throughout history, when things take place at the same time, the American Revolution and the French Revolution, same idea as Locke Rousseau. Well, we shared a lot of ideas with the Paris Accord at the start. We've lost some of that alignment. I don't have to go into brown blockchain issues here on this panel. It's not what we're here to talk about. But I want to thank you all for coming today, because by coming today, you're doing your part to help move us toward restoring that alignment and earning our rights to be, as we sort of go around explaining ourselves to the world, the stewards of the trust layer for the planet. So thank you all for coming today. I appreciate very much your being here. I'm not going to answer this phone call, if I may. I'd like to start by introducing asking my panelists. Chris was very kind in describing what we all do for a living today, but we all got here from somewhere. Both Bill and Lisa have long histories in the spaces, eco-warriors, and I'd like each of them to take a minute to talk about how they got here. I'm going to start with you, Lisa.
Oh, hey, thank you. Hi, everyone. Thank you for coming. Actually, in Australia, we have a tradition called a welcome to country, where we acknowledge the traditional owners of the land. So I'd like to bring that in here. So I acknowledge the traditional owners of the land, past, present, and future, of the land we're standing here today.
In Spanish, please.
In Spanish. No hablo español. And also acknowledge Pride Month. I lost my pin, so I am wearing Pride sneakers for those on the live stream. I have a background in sustainable finance, 30 years in finance. I'm very proud to say half my career has been in this space, and the last couple of years have been working with Consensys on a couple of projects tokenizing carbon. So really excited to unpack that here today, and I might just leave it there. Thanks, Bill.
Hi, thanks for joining us today. So Bill Kentrup, originally from the US, moved out to Asia in 2001. So before moving to Asia, my career was more oceanography, doing oceanographic physics and chemistry. When I moved out to Asia, it shifted to environmental finance. So for a multinational, I set up a carbon finance business in the early 2000s. We were very active in over 12 nations, financing climate-aligned infrastructure, bringing those emission reductions into various markets. I set up a similar business for a financial institution, Macquarie Bank. I ran the environmental infrastructure business, putting growth capital into clean energy, waste management, sustainable agriculture, and then helping to monetize and create incentives around the environmental impact for those assets. So I ran that business for 8 years, and in the recent years, through Allinfra, looking at tech, looking back at the problems in that market, looking where the friction is, the hidden optionality, the value that needs to be unlocked to really accelerate climate finance, and looking at tech to unlock some of those issues and really move things forward. So appreciate the time today.
Thank you, Bill. I think the key foundation to follow and really engage with us in this conversation, which I hope you will, is to understand the role of climate finance in project finance. I want to build a solar farm. I want to build a wind farm. I'm going to go to the bank. I'm going to get a bunch of money, and I'm going to make all my money back selling electricity. But that's not how it works, because there's a gap. Would you just take a minute and walk us through the role of carbon credits, the role of offsets, the role of that other layer of finance, which is, I know, relevant to this conversation?
Sure. So if you look at any market, there are quite a number of factors that contribute to whether a project is viable. Some of the factors that lead to unviability might be doesn't meet a financial hurdle, technical barriers, common practice barriers. There are a bunch of things that get in the way of building climate-friendly assets. And so the basic premise of what's called cap and trade, so effectively a mechanism that allows someone to invest in a project with that additional incentive, as Stephen mentioned, in the form of a carbon credit, sometimes a renewable certificate. There are other environmental financial products, but what that does is that creates enough incentive to then overcome these risks and barriers. So it then turns a project that would otherwise not happen into a project that's now got enough upside for the developer to take it forward. The idea around that is your business as usual is all the projects that would kind of happen anyway because they're doable. That additional incentive is now to move the needle toward more emission reductions, more climate alignment through that carbon credit and through a cap and trade. If you look at it from the perspective of investors, if you're, let's say, a steel plant in Germany where if you're investing in emission reductions at your own site, you take that same capital, invest in, let's say, a steel plant or any other facility in a developing nation, for example, you may be able to reduce 3 times the number of emissions. So cap and trade is a mechanism to find the lowest cost for abatement so that the capital can have a larger outcome over time.
Now, with that background, I'm going to ask Lisa and then yourself to address this. What is currently working and what is currently failing about the current system of climate finance, and how can blockchain and DAOs in specific make a difference in solving for that? Starting with Lisa.
Yeah, that's a can of worms. There's a couple of different places we can look there. So firstly, I'd like to start by saying I absolutely think DAOs and stakeholder capitalism can transform sustainable financial markets, and that's one of the reasons why I'm sitting here today. So I'd like everybody to see that because it's really important. Firstly, we can look at existing shareholders and equities holdings and how stakeholder capitalism can actually change the vote on sustainability issues at the board level if we were to create DAOs out of all companies. Because right now, if my pension fund, because we're in America, my super fund in Australia, is invested in a company and they want to participate in a vote, they have to, for the environment, they have to nominate a proxy for that because a lot of the shareholdings are sitting in custodians. And if we were to transform...
If somebody wants Standard Oil to own the sun instead of vote for owning the sun instead of owning fossil fuels, you got to get a seat at the table.
That's right. And the seat at the table is currently passed through, and proxy voting is quite difficult to do. So in that regard, it's transformational. And then on the other side of the equation is the carbon tokenization that I think we'll unpack a lot today, and the ability to create sort of DAO-type investment structures that allow those type of financial instruments to underwrite the risk in the financing, as Bill was talking about. And for me, that's transformational to how we fund and how we can operate. And the third way is a little bit of a cool thing we were talking about before, is actually, which you didn't hear, is as a listed company in Australia, I have a carbon liability. Every listed company in the world, unless they are actually producing carbon credits or in that space, has a carbon liability. We can now tokenize that carbon liability, which can then play into these conversations on the demand side of the equation. So what Bill was talking about was the supply side with projects. But if I can digitally originate the demand side, tell projects from a desktop or a DAO type structure, what I'm willing to buy as a corporate, that's game changing, because project leaders can go and take that demand and we can, freeze it or, hash time lock it or whatever we could do, and then they can use that to have certainty around the projects that they're developing, and for me, that's a game changer.
Same question, Bill.
Sure. So as Lisa mentioned, I'm sort of focused on the developer side, the finance side, and within our company, we've got quite a number of renewable energy developers, forestry carbon developers as shareholders, as participants, and and I've been financing in that space for close to 20 years. And if you look at what are some of the long-standing challenges, what keeps climate finance from really moving efficiently, a lot of times people ask, we've got a DAO that's under development, does it need to be a DAO? Why a DAO? And the way I look at it is, let's first look at the issues. So one of the issues is for developers who are out in the field, they're getting permits, getting approvals, negotiating contracts with suppliers, training staff, hiring people, and they've got a lot of granular work to do, and then they're in a capex intensive business. And so what that means is now they've got to figure out where they're going to get the capital from. And in the traditional market, that can be very intransparent. It's unpredictable in terms of how long it's going to take. It could take 3 months, it could take 9. Often the structures available vary over time. You've got a misalignment on the front end of where am I going to get my capital and how long will it take, and if I don't get it in time, I lose my permits. On the back end, a lot of this field is financed by infrastructure funds and other asset managers that have some fixed window of time they can sit on that exposure. So they can provide capital, but if your platform, let's say, who's building assets and working hard, doesn't have an IPO or some kind of exit within 3 years or 5 years, there are often mechanisms in place that allow that investor to force an exit, to tell you to sell half your assets to get them out. And so that's really misaligned in terms of long-term stability and growth for climate infrastructure developers. And if you look at how would you solve those problems, there are lots of ways to go about it, but what it boils down to is transparent criteria for developers, transparent approaches to structure, financing structure that are clear, that are published, and an efficient process. So a bunch of ways you might attack that, but when we've worked on that with our developer community, you end up with something that fits really nicely in a DAO. Likewise on the stakeholder participation. So all of us, and even folks that aren't anywhere close to the climate space, you see all the headlines of corporates, asset managers, institutions making significant climate finance targets. And then you have the analysis of what's actually going on. Has anything changed? And you're seeing a lot of that come through where actually the allocation of capital hasn't changed all that much. And so if you look at then how do you get the wider community of investors and stakeholders involved in this great asset class, participating in it, having exposure to it, but also keeping the larger investors honest. What structure would you put in place to have that participation, to have visibility and transparency, and to be able to steer and incentivize a financing platform toward long-term climate impact? And so again, doesn't have to start with a DAO, doesn't have to be a DAO, but when you start to take all the pieces that historically have really presented barriers and challenges to the market, and you try to figure out how can you really enable and unlock some of that friction, you end up with something that kind of looks and smells like a DAO. Apologies to DAO House, it doesn't have to be a DAO, but you end up with something that more or less is a DAO-like structure, and that's not just from the perspective of my platform who builds tools on blockchain, but from the developers themselves. They're working with us on what's called Evergreen DAO, and pretty excited about that.
Lisa, you're with a publicly listed company now in the finance space, a good deal of climate-related finance. And as I've heard it, you're now running your management team as a form of DAO and getting some hands-on experience. How's that working out? And share some stories with us.
Yeah, so it's actually our investment committee because we run a fund as well. So,
sure.
And what we've bootstrapped it, to be honest with you. So, but to me, that's the foundations of building a great DAO, because we're starting to run the investment committee through DAO type processes and to develop investment processes around that, and hit and miss, but mostly hits. And then the learnings, I think, from what we're doing really sit around asking the right questions, and then who has the votes in the DAO, because what we don't want to see if we have environmental DAOs, we don't want big whales coming in that have a vested interest to the environmental movement. I don't know about in America, but in Australia, climate change is the most amount of money ever spent on lobbying in the history of Australia, and that's not on the positive side. So let me say that again, the most amount of money ever spent on lobbying, and what we don't want is that type of large chunks of money coming in and voting down environmental movements. So it's very interesting with our investment committee. The voting is really working. You've got to ask the right questions, and then I think we need to think about the weights and also in environmental DAOs, how you think about who gets the vote, how it's weighted, and that fairness around that.
Can I just add something
Please go
to
ahead.
that? So I mentioned I was with a financial institution for 8 years. Macquarie Bank is an Australian financial institution, and during the course of our carbon business during the Kyoto markets, which was 2005 to 2012, every year or so we thought now's the time to set up our Australian carbon business because the policy is heading in the right direction and there's lots of stakeholder buy-in, and then there'd be some kind of government vote of no confidence and the pendulum would swing the other way, and we'd shut down that office. So I can attest to the fact that the volatility and stability, if you can find a way to bring more, it was always clear that the market or the general sort of landscape of developers and individuals were really behind green finance in Australia, but it was really hard to get the policy aligned with long-term stability in that market.
And people ask me why I'm a yoga teacher. I rest my case.
Who are the stakeholders? Let's look at, we're gonna create Company A. We're now living somewhere where they've decided we're going to accelerate our solar development in the in our stand where we're living, and we now need to figure out how to get that solar out there in a way which is both cost efficient and hopefully meet some environmental justice needs. How do we go about identifying who you think are the relevant stakeholders who need to be at the table if you're going to set up your own climate DAO?
Well, I'll have a crack at that. I guess maybe as an example, I can reference a project, and quite a large project that we're working on in Mongolia. In my business, I still cover significantly Asia Pacific, and we've got a team of collaborators for a very large project in Mongolia. It's close to 1 million hectares, and it involves the integration of solar, wind, and grassland rehabilitation, and then over time, agriculture, greenhouse agriculture using the waste heat from the batteries. And the early renewable projects are already under construction. We're looking at the methodologies for grassland rehabilitation, but maybe to kind of bring that into sort of common terms. So renewables, we understand. Grassland rehabilitation is in that space of carbon markets called natural capital, so forestry, grasslands, mangroves, things like that. And what it means is that you find a way to manage the land.
Are we now planting grass instead of planting trees?
Well, it's close to that, but what you're actually doing is and this comes to the stakeholder question, what you're doing is you're introducing a different practice for grazing. So in that region, you have herders, nomadic herders that have a particular grazing practice. And what you do is you introduce some adjustments to that grazing practice that then allows the grass to grow back stronger, more healthfully. And when you have stronger, sort of a base of stable grasslands, you're sequestering a lot more carbon, so you're keeping a lot more carbon in the ground. For them, it's a healthier, they're able to manage and grow a lot more livestock. Their income increases. They have much more predictable access to grazing land. And I guess so to the stakeholder question there, you've got on the power side, power made available to communities in Mongolia that don't otherwise have it. You have improvement of lives and livelihood of the local community. You have training of practices that they can take with them long after the project is, let's say, handed back to the local stakeholders for the long term. And then you've got investors. So in that project, there's well over $1 billion US of capex required over the next few years. So it'll need a lot of capital, a lot of investment, and that's everything from 5 to 10 mil of high-risk development capital to the large tickets for building and constructing assets. So investors, developers, operators, local community, local government, everyone getting what are fairly visible and even sort of blockchain recorded.
Lisa, who are the important everyones?
Yeah, so I might just land that community point with my community energy background, because in the real world, when you want to do a community project, it's really hard to get funding for it, even if the returns are good. And I would see in this example a DAO being really powerful for engaging community demand and being able to aggregate that demand so it's a concrete number for investors to underwrite the risk of the project. So I think there's a massive opportunity right there, and I think we'll probably, and one of the most inspiring things for me about crypto, and another reason why I'm sitting here today, is that community element and the ability to engage communities and get everybody's buy-in. And then that whole voting concept, do you want solar or wind? Every community who wants renewable energy, you have differing opinions on what type of energy mix we can bring and what type of credits we can create. So I think there's a really interesting aspect there. And then there's a disintermediation as well of, at the moment, one of the things that's holding the carbon credit market back is the registering of credits. It's very expensive, the audit process is tiresome, and there's a lot of fraud and you have to pay a lot of money. So a lot of small projects, it's not viable to register the credits. If we can digitally originate those credits and have them validated in that DAO structure, using the power of crypto, then actually we can, by digitally originating the carbon, and sorry to all the registries, we'll still use you. However, we can digitally originate, which will actually make a lot of smaller projects more viable. And we're doing a lot of work in this space with carbon NFTs, to be honest with you, because the stakeholders aren't investors. It's much easier to create charitable projects and test these theories than it is to do in the big world.
You actually, using the word originate, you actually originated what I think is the single largest carbon credit trading scheme on Web3 anywhere in the world. And it was your idea. We played a small role, but you led the effort. You had the idea before even Adam Newman had it.
Ideas are a funny thing, from concept to creation, and this is one topic that I'm so passionate about. Everybody should go and do it, because we need more supply, we need more demand. If we're digitally originating carbon, it's a game changer. There's so many great projects now. That I think if we all, jump in together, it's a really good example of how a community can move towards getting a really great outcome for society and all of us.
Are there so many great projects? Because what I keep hearing is, at various times, and I've been a bit of an OG in this space, seen a lot cycle through. Various years, one hears there's tremendous supply, not so much interest. Then there's tremendous demand, not so much supply. Where are we?
Oh, that's hard. I think from my point of view, the demand side is really picking up. I think corporates are really starting to understand that they can no longer greenwash, and they have to authentically validate their claims about being sustainable. And I think that carbon has a huge role to play. So certainly in Australia, the corporate demand book is starting to build, but it comes back to that, how do we really know where the demand is? And that's another, if we can tokenise this demand, build demand DAOs and really aggregate that side, I think we'll clean up a lot of the mess in the market. And so unfortunately, I think the magic's always in the mess, but I think we've got quite a long way to go. From my point of view, and hopefully this is Chatham House rules and then broadcast to millions of people. So I'll tell this story, but I've had people from the old carbon market say that we don't need you, we don't need to digitise carbon credits, everything's working just fine, because they're making making 30% margins, and they're clipping the ticket at all different parts of the value chain, and they don't want our technology because they want to make all the money. And I don't want anyone to really make money out of carbon other than fund projects, digitally originate, transact, and then I think we will have a really great global carbon market. And then all the policy stuff, but I won't go there.
I used to use the term opaque accounting until someone corrected me and used the term that I've come to love, opacity. Apparently it's a real word.
I love that, opacity, yeah.
Bill, did you want to take a crack at that?
Yeah, I was just going to say that.
I saw you leaning in.
Yeah, there is actually something quite different with the way the Paris Agreement structure was set up that hopefully smooths out some of that lumpiness that you were describing. So, most emissions trading markets, which go back decades, are set up with a window, a start and an end. And what often happens in those markets is a lot of uncertainty in the beginning, price rockets up, and then collapses in the last year or two. And that's what happened with the Kyoto market it ended 2012, but 2010 and a half, the price started collapsing from over 30 euros a ton down to less than one. The way Paris Agreement was set up is that it doesn't have that kind of expiration date. So it's set up with a long-term goal to get to that objective of keeping global temperatures from rising over 1.5 degrees above historic baseline. So it's a much longer dated sort of proposition, and every country that signed up to it, which I think now is 196 or 97, has to set a target underneath that. So what that means is that there's domestic, not just sort of foreign buyers coming in and financing, but domestic targets that need to be met. So that will create a much more stable, widespread market that has, in my view, it allows for people to build businesses around that in a kind of less risky way.
Let's challenge slightly the Chatham House rules for a second. I'm sure all the viewers out there online are also keeping by the Chatham House rules. There are some specific companies in the climate DAO space. ClimaDAO, very well known, Climate DAO, Change DAO, Flow Carbon, Metacarbon I've just heard about. Do you want to take a second and point to a climate DAO in the space that you have strong feelings about? They're doing it right or less right, and how would you rate the field, let's say?
I'll go first. I advise Metacarbon. I think they're awesome. To me, we were doing something so complex last year, and during the lockdown I was walking along the beach when I was speaking to Metacarbon. I said, oh, here we go. And then the way he explained to me this simplicity of selling an NFT that's carbon backed, I was like, oh my God, this is actually the idea, this is the winning idea. And I very quickly volunteered to help out in any way I can. So I just do what I can and sort of tag along with them. And then ClimaDAO I love. And obviously it's had its challenges, but I really do hope that a concept like that gets up, because I think it's really important, because all of us can use our crypto wallets to, in a way, buy credits, and I think that's really important. I'm very passionate about all of us simply living in Web3 all of the time.
And voting with our wallets.
And voting with our wallets, and I think that those types of projects are really important.
Okay, so I'll maybe address it from the perspective of a lot of what I see going on relative to what's needed. And so, this was very similar to early Kyoto markets back in 2003, 4, 5, before the market kicked off. What you see is a lot of ideas and a lot of capital coming into the market saying, look, this is going to be a big market, let's get a piece of it. What's an obvious and potentially big play? Let's set up a carbon exchange. Let's get our foot on as much carbon as we can. A lot of what I see happening in the market, whether it's Web3 space or otherwise, is propositions that are set up to get hold of existing credits. So buy existing credits, tokenize existing credits. The big issue is then what? So, there's where the capital's needed, where it's needed to move the needle on climate change, is deploying that capital into new projects that are going to reduce emissions going forward. So if I look at sort of a clean
and you're launching an evergreen DAO.
Correct. Yeah, it's all based on climate futures. It's all assets.
I'll invest in that.
Okay.
I'm not soliciting investment, just
No advice.
but but if you look at even
You just got your plane ticket paid for, Bill.
Thanks. If you had a structure like that where you're engaging with projects that have genuinely valid historic emission reductions, that there is merit in taking those out of the market, but these are also credits that have likely been written off by those developers. What you could do is take them out of the market, but stipulate that the use of proceeds, so when they get paid, that has to get then reinvested into new emission-reducing assets. So you can there was something similar under Kyoto called the Green Investment Scheme, where there was some questionable credits. There were buyers that were interested. A mechanism was put in place that required the reinvestment of the capital that was used to pay for those credits into new emission-reducing assets. So my view is, whatever you're doing and whatever the structure is and who's ever doing it, if it's not focused on deploying capital into new assets that are reducing emissions going forward, then you have a very short shelf life on your business, because last year people were able to buy credits when they arose. 6 months later, and this happened under Kyoto, everyone starts negotiating 3, 5, 7-year contracts, and they lock up the credits long term. So there will be no credits showing up at all these platforms to be consumed. They'll be under long-term contracts. So you need a way to get your, kind of hook in those future assets.
We're in the blinking light moment of this panel. Luckily, we're the last panel of the day, so I'll impose on the two of you who committed 30 minutes to commit 3 more, and let's see if there are any questions here from our IRL audience. Is there some real life out there? Give us a question. What's your question? You nodded and said yes, you're on.
There's a microphone there. I actually have a question. Eventually.
Okay.
I can ask you a question.
There we go. There's a brave soul.
Well, I was really curious about when you mentioned you created a DAO inside of a company, an investment DAO. I'd like to understand that a little bit more. Are you saying that DAO is owned by the company and it's just a way of just making decisions to manage money that's owned by the company?
Yeah, so it's our internal fund, which is a product, and it's how our team interacts with each other. So inside of an investment committee, traditionally in finance, if I'm sitting on an investment committee, we all sit around and we talk, and we might take minutes of the analysis we've done on investments that we'll make, yada, 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 and it's never really properly documented. And now what we do is we create and digitise that, so all the votes are registered, all the conversations are captured inside of the digitisation of that, which is, for me, a first step towards automating that. But right now, it is we simply digitise it. Yeah.
You're looking to change, actually, autonomous to automated.
Yeah. So I have a slightly alternate view on the A, autonomous versus automated, because I have, just because of what I've witnessed in my career with large shareholdings and the bias with and skew, I think that it's better to have it automated as opposed to autonomous, and that we can take that offline, but that's just a personal view, which I don't want to get.
Well, I'm just curious, did you give everyone one voting token, or did you give them different amounts?
Yeah, so right now, we all get equal vote, and then that's where what we have to grapple with, because it's like, okay, well, actually, we have people on the investment committee that have 1 year's experience, and then we have people with 30. So what I think we'll do is we'll weight it to relative experience and the types of sector analysis. And if we have, for example, we've got someone on the committee who is an expert on crypto, they'll get a larger weight on a crypto vote as opposed to, if we're looking at voting on data tokens or something like that. So absolutely, that's what needs to be worked out. I think it's very important that when you're talking about intellectual property versus proof of stake in something like an investment committee, I think experience is extraordinarily important, and that's what we're experimenting with. Like, what did we do wrong tomorrow? What do we do wrong yesterday? How do we improve it tomorrow? And every month we're working on it. So it's not a product that we sell, although I do have a wonderful dev team, of which David's sitting over there, who are dying to build it, but at the moment we're still in the beta testing, I guess you would call it. Another
brave soul.
Yes, yes. Jamar, the crypto politician. So hearing about how you're utilizing the carbon credits is phenomenal. So what I'm hearing from you is that you're utilizing DAOs more as an administrative tool versus as an organizational tool. Is there going to be a shift from administration to organization? And I know that some of the challenges with that is particularly if your DAO is structured, if your DAO has a treasury, now you start running into regulatory concerns. So making that shift from an administrative tool to an organizational tool, is that something that your organization is looking into?
Bill, I know you're on Evergreen DAO, you're looking to engage and reward a fairly broad constituency. Do you want to take a minute on how you arrived at those decisions?
Yeah, sure. So, and I think maybe to elaborate on it a bit, there's some things that I suppose it might fall into that organizational kind of framework. So, the thesis around Evergreen DAO is really backing developers that are building climate-aligned assets. So that could be renewables, could be forestry, sustainable agriculture, and again, it's sort of by developers for developers. So our developer community are participating in creating this DAO, and it does have a treasury. It does, or it will have a treasury that will be deploying capital to back these developers with very transparent criteria for development stage, construction stage, operating stage, and the treasury then gets delivered distributions from those assets, both in terms of traditional distributions as well as emission reduction certificates, other environmental products. Now, there's a governance side over here, so this is the EVG, the Evergreen side of the DAO with the treasury. Then you've got the governance community that helps to steer that DAO. So these are people that are essentially incentivized, getting fees that relate to, that DAO is meeting, the basic principle of the investment returns that those investors needed to get, right. But we need to leverage it more for carbon.
But you're going very broad on the decision making and the governance side, right?
Yeah, well, there's a lot to unpack with that as well. So there are a bunch of things that in that developer space, things where you need to bring in experts. So does that particular project have the permit required to start construction in Myanmar? That's not a question you would put up to the DAO. So or to the broad governance community. So the broad governance community is able to influence broad directional and important factors of what drives the DAO, where it goes, and what it's doing. But then you need to be able to bring into that proposition on a regular basis people who understand law, people understand permits, people understand what it means to have an investment grade power.
Like Lisa is doing, rewarding expertise and experience.
Yeah, and if you think of so what Bill is doing, I consider supply, and then an investor is the demand to the other side of that. So if you consider having an investment committee that's a DAO, I can have all of my investment criteria pre-programmed into the smart contract. If I pre-approve the criteria, especially digitally originating the carbon and the investment, then Bill's DAO can know what my DAO would invest in, and they can use that as project checking criteria to OK projects and to all communicate and support each other. So there's this really beautiful way we can all work together that saves. Why can't we do it now? Because it's so time consuming, it's so expensive. So this is cheaper, smarter, faster, and I think it will allow for rapid deployment of capital, which is what we truly need.
Those have been some of the use cases of DAOs that I've seen really, particularly for my clients, is making sure that they don't run into regulatory issues with the SEC, particularly with how they issue tokens within their DAO and whatever they expect as a result of the DAO. So I applaud you for how you're utilizing DAOs in your particular organizations.
Thank you.
Appreciate it.
Thanks so much. And thank you all for coming. As I said at the outset, it's a vitally important topic. I don't have to remind any of you that the brown blockchain narrative lives, and every time you show up at a meeting like this, and I encourage you to keep track of the sustainability in blockchain space, because it's only going to be growing, and it needs to.